The next policy that I'm talking about is the whole life insurance policy. So whole life insurance has a savings component to it. Okay, and I won't get too deep into that, but it has a savings component to it as well as a death benefit component. Now, with the whole life insurances, here's another reason why I recommend you get this, is you can do your own banking through whole life insurance policies, especially what's called the Index Universal Life Policy. Those are both whole insurance policies, but just a little bit different. Once you accumulated a certain amount of money, let's just say family member needs $30,000 to start a business. Well, you all could basically hold your own family board meeting, decide on whether or not you're going to lend $30,000 to that family member. If it's a good investment, you can determine the repayment terms as if you were a bank, and you can decide to disperse those funds in the form of a loan to that family member to start that business. You get the idea. That's whole life insurance. Now, your Index Universal Life Insurance, it also has a savings component, but it also is tied to the market as well. So you have a savings component that's here. That's your principal that you put in. You never lose that money. And then you have the market. So we understand that the market can go up and down, but there's a guarantee in the IUL, or the Index Universal Life Policy, that no matter how the market fluctuates, you never lose your principal. It's a good vehicle, and the same thing you can do with the whole life insurance policy. You can also borrow from that without penalty. It's not the same as your 401k or your IRAs, where there's going to be penalties.